Hello students, welcome to the third session of recording business transactions. Today we are going to discuss about accounting equation. It is considered to be the foundation of the double entry accounting system. Accounting equation signifies that the assets of a business are always equal to the total of its liabilities and capital. An accounting equation is based on the dual concept of accounting, according to which every transaction has two aspects, namely debit and credit. It means that every transaction in accounting affects both debit and credit side equally. According to business entity concept, business is a separate legal entity from its owner. Thus, the amount invested by the owner in the business is a liability of the business and it is called capital. Accounting equation thus refers to an equation in which total assets are always equal to total liabilities, that is, capital and liabilities. Assets is equal to capital plus liabilities. Analysis of business transactions. Business transactions may affect either both sides of the equation or one side of the equation, but the ultimate effect must be equal on both the sides. Now, let us see the effects of some transactions in a business concern. First, let us see the transactions affecting both sides of the equation. This is the first transaction in a business. Commence business with cash rupees 3 lakh. The owner of the business is investing 3 lakh as cash in the business. Let us see how this transaction is given effect under both assets and liabilities side. You can see that this 3 lakh is added in cash under asset side and it is also added under capital, as the cash brought in by the owner is called the capital. So both the side 3 lakh is entered. As cash is invested by the owner, it should be shown in capital. Anything which is brought in by the owner is termed as capital. As business is receiving asset in the form of cash, it is to be shown in the asset side as cash. The second transaction is bought goods from Ram rupees 30,000. Here you can see the old equation, 3 lakh under cash under asset side and 3 lakh under capital. After the old equation, we have to give effect to the second transaction. What is the second transaction? We are buying goods from Ram. When it is not mentioned as cash purchase, we have to consider it as a credit purchase. So now let us assume that we have purchased goods from Ram on credit. In that case, 30,000 should be added in goods under asset side, and that 30,000, it is a liability as we have to pay to the creditors. So it will be shown under the liability side as creditors. So now the new equation is 3 lakh under cash and 30,000 under goods, and 3 lakh under capital and 30,000 under creditors. So both the sides now it is equal. As goods are purchased on credit, one effect is that it should be shown in the asset side as goods, and other effect is as the goods are purchased on credit, it is to be shown in liabilities as creditors. Now the third transaction is sold goods for cash at 13,000. Here the cost of the goods is only 10,000, but we are selling it for 13,000. So that 3,000 is profit for us. So now the old equation is 3 lakh plus 30,000, and on the liability side also it is 3 lakh plus 30,000. Now the current transaction is, we have sold the goods worth 10,000. So we have to reduce 10,000 from goods side, and for that we are getting 13,000 cash, so that we have to add under cash, and that 3,000 we are getting profit, that should be added to the capital. So now the new equation will be, in cash we will have 3,13,000, and in goods we will have only 20,000 as we have sold the goods worth 10,000, and in the capital we will have 3,03,000 as we have got the profit for 3,000, and 30,000 we will have under the creditors. This will be the new equation. The transaction will affect both sides. As cash has been received, it is to be added back in cash as rupees 13,000, and goods are to be reduced by 10,000 as goods have been sold. Also profit of 3,000 is to be added back in capital. Net effect will remain same for both the sides. So both the side, the equation, if you add the amount, you will get the same amount. Coming to the fourth transaction, paid to creditors rupees 20,000. Now in the old equation we have 3,13,000 plus 20,000 and 3,03,000 plus 30,000. Now here we are paying 20,000 to creditors, so 20,000 should be reduced from cash, and the 30,000 which we have under creditors should be reduced for 20,000 because we have paid 20,000 to the creditors. So now both the side it will have the same effect. So under cash now we will have 2,93,000, and under goods we will have 20,000. Under capital we will have 3,03,000, and under creditors we will have only 10,000. When we add both the sides, the amount will be equal. The transaction will affect both sides. As cash has been paid, it is to be deducted from cash as well as from creditors because payment is made to them. Now let us see some transaction related to expenses. All the expenses or losses are to be borne by the owner, although business is a separate legal entity from its owner, as he or she is the person who has taken risk to do the business. Now the fifth transaction is rent paid rupees 5,000. So the old equation is 2,93,000 plus 20,000 in the asset side and 3,03,000 plus 10,000 in the liability side. Now the current equation is 5,000 is paid as rent. So 5,000 will be reduced from cash and 5,000 will be reduced from the capital also. So both the sides the effect will be the same. So the new equation is 2,88,000 plus 20,000 under asset side, and under liability side it is 2,98,000 plus 10,000. Every time when you add both the side you will get the same amount. The transaction will affect both sides. As cash has been paid, it is to be reduced. Capital also is to be reduced because expense is to be borne by the owner. Next comes a transaction related to income. Income or profit is a reward for taking risk. As risk is taken by the owner, it is to be added in capital. So when it is expense, we will reduce from the owner's capital because the risk is taken by the owner. Similarly, when it is income, as the owner is taking the risk, the income will be added to the owner's capital. Let us see one example for this. Commission received rupees 8,000. Now the old equation is 2,88,000 plus 20,000 under asset side, and under liability side it is 2,98,000 plus 10,000. Now the current equation is commission received 8,000. As you are receiving commission, it should be added in the cash as 8,000, and it should also be added under capital. So now the new equation will be 2,96,000 plus 20,000 under asset side and 3,06,000 plus 10,000 under liability side. The transaction will affect both sides. As cash has been received, it is to be added back in cash as well as in capital. Transaction related to accrued or outstanding income. Income is to be added back into the capital, but as it is not received, it should be shown in the asset side as accrued income because it is meant to be received in this financial year. See, in some cases, some income will be accrued, but it would have not been paid. In that case, it should be shown as outstanding income. Now, let us see one example for this. Accrued interest rupees 10,000. So, the same problem which we were doing so far, in that the old equation was 2,96,000 plus 20,000, and under liability side it was 3,06,000 plus 10,000. Here, as the interest is accrued, it should be added under asset side. You have to give a separate column along with cash plus goods. You have to give a separate column for accrued income under asset side, and under accrued income you have to show 10,000, and that 10,000 should be added with the capital also, because later if it is paid it will be added along with the capital only. So the 10,000 should be added under the capital. So it will be given effect on both the sides. Now the new equation is 2,96,000 plus 20,000 plus 10,000 under asset side, and 3,16,000 plus 10,000 under liability side. The transaction will affect both sides. Accrued income has been added back to the capital, and as it is not received, it is to be shown in the asset side as an asset. Now, transaction related to prepaid or advance income. It is just the opposite of accrued income. Accrued income means you would have accrued the income but it is not paid, but here it is paid in advance. As income is received in advance, it does not belong to current financial year. So it cannot be added back to the capital. It is an amount which is received by the business firm for the future course of activity. Till the activity happens, it is the liability of the business. Now let us see an example for the prepaid or advance income. Prepaid rent rupees 5,000. Now the old equation is 2,96,000 plus 20,000 plus 10,000 under asset side, and 3,16,000 plus 10,000 under liabilities side. Here the prepaid rent is 5,000. We have received the rent, so we have to add it in the cash account, and that 5,000 should be shown as a separate column under liability side as prepaid rent. Now the new equation is 3,01,000 plus 20,000 plus 10,000 under asset side, and 3,16,000 plus 10,000 plus 5,000 under liability side. The transaction will affect both sides. As prepaid income is a liability, it should be shown in the liability side, and cash received by the business should be added back to the cash column of asset side. Transaction related to prepaid or advance expense. So previously we saw the previous or advance income. Now we are going to discuss about the prepaid or advance expense. As expense paid in advance, it does not belong to current financial year. So it cannot be deducted from capital. It is an amount which is paid by the business firm for the future course of activity. Till the activity happens, it is the asset of the business. Here the prepaid insurance is rupees 4,000. Old equation 3,01,000 plus 20,000 plus 10,000 under asset side, and under liability side it is 3,16,000 plus 10,000 plus 5,000. Here we have prepaid the insurance, so it has to be reduced from the cash. 4,000 has to be reduced, and it is shown as prepaid expense under asset side as a separate column. So now the new equation will be 2,97,000 plus 20,000 plus 10,000 plus 4,000, and under liability side it is 3,16,000 plus 10,000 plus 5,000. The transaction will affect both the sides. As prepaid expense is an asset, it should be shown in the asset side, and cash paid by the business should be deducted from cash column of asset side. Now let us see some transactions affecting one side of the equation. Transaction affecting asset side of the equation. Though the transaction affects only one side of the equation, when you add the amounts in both the sides, both the assets and liabilities side, the amount will be equal only. Let us see some examples for it. Purchase machinery for cash rupees 80,000. Now here the same problem, children, same problem only we are discussing with so many transactions. Now what was the old equation? It was under asset side, it was 2,97,000 plus 20,000 plus 10,000 plus 4,000, and under liability side it was 3,16,000 plus 10,000 plus 5,000. Here when the machinery is purchased for cash should be reduced for 80,000 under asset side, and machinery should be added for 80,000 under asset side. So both are done in the same side, but the effect will be the same in both the sides. So in single side only this 80,000 is added and subtracted. Under asset side 80,000 is subtracted under cash, as cash is paid to purchase the machinery, and the same 80,000 is added under asset side as machinery. So one side only is given effect, but still both the sides the amount will be the same if you add. So now the new equation is 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000, and liability side it is 3,16,000 plus 10,000 plus 5,000. When you add both the side you will get 3,31,000. The transaction will affect one side, as cash has been paid for purchase of machinery. Machine is a fixed asset, so it is separately shown in the asset side, as well as cash is to be reduced. Now let us see one example in which the transaction affects only the liability side of the equation. Transaction related to outstanding expense. Expense not paid yet or outstanding but belong to current financial year is deducted from capital, and business has to pay it in near future. So it is the liability of the firm. Let us see one example for this. Salary outstanding rupees 8,000. Here the old equation is 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000 under asset side, and 3,16,000 plus 10,000 plus 5,000 under liability side. Here the salary is outstanding, so it has to be reduced from the capital, and you will create a separate column outstanding expense under liability side. So this 8,000 is both added and reduced under liability side, so it is affecting only one side of the accounting equation, but the effect is on both the sides. Now the new equation is 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000 under asset side, and 3,08,000 plus 10,000 plus 5,000 plus 8,000 under liability side. The transaction will affect liability side, as outstanding expense is a liability. It should be shown in the liability side and expense should be deducted from capital. Transaction related to interest on capital. As interest on capital is the expense of business, it should be shown or deducted from the capital. Interest on capital is the amount which is to be given to the owner, as capital is invested by the owner. Therefore, it is to be added back to the capital. Let us see one example for this. Interest on capital rupees 10,000. Now the old equation is 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000 under asset side, and under liability side it is 3,08,000 plus 10,000 plus 5,000 plus 8,000. So this interest on capital should be added to the capital, and also it should be reduced from the capital. So the new equation will be 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000. There is no change in the asset side, and in the liability side also there is no change, because we are adding and reducing the same 10,000 rupees. 3,08,000 plus 10,000 plus 5,000 plus 8,000. The transaction will affect liability side, as interest on capital should be added back and deducted from capital, as both of them belong to the owner. Transaction related to interest on drawing. As interest on drawing is the income of business, it should be shown or added back in the capital, as well as interest of drawing is the amount which is to be given by the owner to the business. So it is treated as drawing and deducted from the capital. Let us see one example for this. Interest on drawing rupees 1000. Here the old equation is 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000 under asset side, and 3,08,000 plus 10,000 plus 5,000 plus 8,000 under liability side. And this interest on drawing should be added and deducted from the capital. So 1000 rupees added and subtracted from capital. So there is no change in the new equation. The transaction will affect liability side, as interest on drawing should be added back and deducted from capital, as both of them belong to the owner. Transaction related to drawing. As drawing is the amount withdrawn by owner from business, it is to be deducted from capital and also from the cash. Owner withdrew cash of rupees 10,000. Here the old equation is 2,17,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000 under asset side, and under liability side it is 3,08,000 plus 10,000 plus 5,000 plus 8,000. Here, as the owner is withdrawing cash, cash will get reduced by 10,000 and the capital also will get reduced by 10,000. So ultimately the new equation will be 2,07,000 plus 20,000 plus 10,000 plus 4,000 plus 80,000, and under liability side it will be 2,98,000 plus 10,000 plus 5,000 plus 8,000. The transaction will affect both sides, as drawing should be deducted from capital and also deducted from cash, as it is withdrawn by the owner. Children, hope you understood the accounting equation.